expertise at statewide seminars for small businesses, not-for-profit organizations, and with community leaders. So with that, I'll turn it over to Craig. Craig, welcome to the webinar. Thank you for agreeing to be the presenter. And we'll just let you get started, and you have your slideshow that we'll work our way through.
Well, great. Thanks very much, Dwayne. It's great to work with ACSA and presenting this webinar, at least for us on the East Coast this evening. We're going to just scratch the surface on a number of items during this webinar. So let's get started. Tonight, or during this webinar, we're going to talk about a number of things. We're going to talk about entity creation. We're going to talk about accounting, whether it's policy and or procedures. We're going to talk about what balance sheets include and how they look. We're going to talk about income statements. We're going to talk about budgeting, and then we're going to round things out with issues, red flag, type issues to watch out for, and then what should be done. So to start with entity creation, anytime you set up an entity, you're going to want to think about whether it's going to be a for-profit or a non-profit or not-for-profit type entity. The important reason for this is that not-for-profit status is not a default. It is not an automatic type situation. So for any entity that you create, any business type entity that you create, and you don't apply for not-for-profit status, you are going to be considered for-profit by the IRS. And this would be the case even though you may have not-for-profit articles of incorporation that you've filed with your particular state. So very important to file the application for not-for-profit status. If you're going to be, and we'll talk a little bit later here in just a couple of minutes about the various, or at least a few of the 501c, and then there's a number type organizations, and this is code language from the IRS as far as what type of an organization you are. But there's two main application forms that need to be filed. One is a Form 1023, and that's an application for charitable status. And the second is Form 1024, and that's going to be the application for really any other not-for-profit type organization. So again, very important that one of these two forms is filed with the IRS to apply for not-for-profit status. The IRS will then approve or disapprove that application. If they approve it, then they will send you a letter to that effect, and then you do have your not-for-profit status. Now, if you have an organization that you've created but you have not gone through this application process, generally you have 27 months to apply. If you apply within that period of time, then generally the IRS will approve, if they're approving your application, they will approve your application back to the date that the entity was created. If you apply with the IRS after that period of time, so more than 2 years and 3 months after you create your entity, then the IRS could and may most likely only approve your not-for-profit status from the point you send the application to them forward. So all the prior period, prior years, prior months, you would be in a for-profit status and then not-for-profit status after their approval. Very important to get that application in as soon as possible. Now, various IRS code section 501c, and then I've got a question mark on the slide. For instance, ACSA is a 501c3 organization. That is considered a charitable type organization. What I want to talk about in the webinar is our three other types of 501c organizations: 501c4, C6, and C7. But let's back up first and talk about if you wanted to try and apply for charitable status for your organization. This is some of the criteria that the IRS and examples that the IRS has concerning C3, as we call them, charitable organization. These types of organizations are religious, charitable, scientific, testing for public safety, literary, educational, and that really is a big one, the educational piece. The prevention of cruelty to children or animals. Those are all examples of purposes that can be approved for charitable status. So types of organizations include nonprofit old age homes. Some of this wording I'm taking directly from the IRS. So parent-teacher associations, charitable hospitals or other charitable organizations, some alumni associations, schools, chapters of the Red Cross, Boys and Girls Clubs, and churches. Those are a few of the examples that could be approved under a charitable organization type application. Now if we move to 501c4 organizations, those by the IRS considers or calls civic leagues and social welfare organizations. So C4 organizations, to qualify under this exemption, the organizer's net earnings must be devoted only to charitable, educational, or recreational purposes. In addition, no part of the organization's net earnings can inure to the benefit of any private shareholder or individual. So those items that I just read under the C4 criteria really would apply to any not-for-profit organization. So very important that these criteria are followed. If the organization provides an excess benefit to certain persons, then the IRS can hit your organization or assess against your organization an excise tax. What's defined as social welfare? To establish that your organization is organized exclusively to promote social welfare, for instance, then you'd have to submit evidence that with your application showing that your organization will operate primarily to further the common good and general welfare of the people of the community. Now, that was C4 types of organizations. Now, what the IRS may try to do with an application is, if it does not fall into the C3 or charitable status, or, and we're going to cover these next two in just a couple of minutes, a C6, which is an association or a business league type status, or a C7, which is social and recreational clubs, then the IRS may try and fit it in a C4. C4 types of organizations can be somewhat catch-all type of status. Now, if we move on to the C6 type organizations, and the full site would be 501c6, these are associations, or how the IRS refers to the organization as business leagues. A business league in general is an association of persons having common business interests, the purpose of which is to promote the common interest and not to engage in a regular business of a kind ordinarily carried on for profit. Trade associations and professional associations are considered business leagues. The general purpose in the application, you must indicate in the material that you're going to submit that the organization will be devoted to the improvement of business conditions of one or more lines of business as distinguished from the performance of particular services for individual persons. It must be shown that the conditions of a particular trade or the interests of the community will be advanced. Merely indicating the name of the organization or the object of the local statute under which it's created is not enough to demonstrate the required general purpose. So activities that would tend to illustrate a common business interest are promotion of higher business standards and better business methods, and encouragement of uniformity and cooperation by a retail, for instance, a retail merchants association. Most states have, for instance, an association for CPAs. Here in Michigan, the Michigan Association of CPAs is an association. They have qualified under 501c6 with the common interest of all of us CPAs, for instance. Another requirement for C6 type organization is an improvement of business conditions. Generally, this must be shown to be the purpose of the organization. The organization is not established by evidence of particular services that provide a convenience or economy to individual members in their businesses. So that is a C6 organization, an association. Now moving on to C7 organizations, social and recreation clubs. If your club is organized for pleasure, recreation, and other similar non-profitable purposes, and substantially all of its activities are for these purposes, it should file the application, the Form 1024, to apply for recognition of exemption from federal income tax under the social and recreation club status. Typical organizations could be college alumni associations, college fraternities, country clubs, amateur hunting, fishing, tennis type clubs, dinner clubs, hobby clubs, garden clubs, and variety clubs. Many members of ACSA could qualify for not-for-profit status under this social and recreation clubs if they don't potentially meet one of the other criteria. Private benefit under this status, the C7 organization, is prohibited, so no part of the organization's net earnings can inure to the benefit of any person having a personal and private interest in the activities of the organization. The purpose, when you file your application, would be to show that the organization possesses the characteristics of a club within the meaning of the exemption law, and you'd want to submit evidence with your application that personal contact, commingling, and fellowship exist among members. You must show that the members are bound together by a common objective of pleasure, recreation, and other non-profitable purposes. Now, you can limit membership. The membership in a social club must be limited to show that your organization has a purpose that would characterize it as a club. You should submit evidence with your application that there are limits on the admission to membership consistent with the character of the club. And that rounds out, and again, in very general terms, some of the criteria the IRS looks at for those types of 501c organizations. I do want to mention also that political activities and any costs paid for lobbyists and those types of services, those are considered non-deductible in total by the IRS now. And so associations, for instance, are required by the IRS to show on their dues statements the amount of dues that a member would pay that is either deductible or non-deductible. So that percentage The non-deductible portion then would represent the amount of that member's dues that the organization has attributed to lobbying that's being done on their behalf. Now, not-for-profit organizations do have to file information returns with the IRS. And these, if you want to call them tax returns, are a Form 990. And there's a very short form, and that's for organizations less than $50,000 in gross receipts. And that's how the IRS refers to that form as a postcard type filing. And it's a 990-N type of filing. It's totally electronic on the IRS's website. There's really no paper, no e-filing of returns or anything like that. It is totally on the IRS website. You complete that. It takes a very short period of time, and you hit submit, and you are done. The next form, the next level up would be a 990-EZ. This would be filed for organizations that have less than $200,000 in income for the year, and also less than $500,000 in total assets at the end of the year. And for organizations that are larger than that, then the full 990 form is required. And over the past few years, these forms have really gotten rather voluminous by the IRS wanting to know more and more information from organizations. And so many more pages have been added by the IRS. And it does take quite a while to correctly prepare these forms. Now, if we move on to state requirements, you do want to, if you are going to be a not-for-profit entity, you do want to make sure that if your state does have non-profit articles of incorporation, you will want to file those. Now, we suggest that you do have you do engage an attorney, build a relationship with an attorney to help with some of these filings. And the reason is that you want the I's dotted and the T's crossed, so to speak, so that if anything were to happen, any claims against your organization, then it has been set up, legally. It's been set up exactly the way it's supposed to be to help protect any and all of the board members. You also then would engage the attorney to help with bylaws that you would want to approve at the board level and revise as needed. Now, in addition, your state may possibly have an application process in addition to the Articles of Incorporation. In Michigan, charities need to apply with our Michigan Attorney General's office for a license to solicit, is what Michigan calls it. So please check with your particular state to see if there's any requirements there that need to be fulfilled also. Now, if we switch gears a little bit to the accounting side of things, we want to have our newly created organization a formal type entity. One of the things that an IRS agent would look at is does this organization have separate bank accounts? Is it truly a business? Is it truly separate from the organizers of the business, the board of the business, those types of things? So we want to have this entity formalized so that we are treating it like a business, totally separate from any of the individuals involved. As far as checking accounts, we want to have separate bank account from any individual. We want to, in some cases, we're going to want to have possibly 2 signers for check amounts. This is usually a policy for amounts greater than, it could be $1,000 for your organization, it could be $2,500. It's however the size of your organization is going to somewhat dictate what that amount may be. Or another internal control type item, as we call them, if your treasurer were to approve invoices and then someone else would prepare and sign the checks, then that can also lend to good internal control. And overall, we want to have very strong internal control. And by internal control, I'm talking about policies and procedures that are in place that not only get the accounting done on a timely basis, but it also protects the organization from any loss of assets or any other things that could happen to the organization. As long as you have more eyes, and I know some organizations are small and so this is difficult, but the more eyes you have in a transaction, then the stronger the internal control could be. When you receive your bank statements, you want to reconcile those bank statements on a monthly basis. And I would recommend that that reconciliation be done within a couple of weeks, if at all possible, from receiving that bank statement, or a lot of people now are receiving their bank statements. They just go online to the bank website and download their statement, which can be done, right at the end of the month. So I would recommend that the account be reconciled very quickly. That way you can catch any mistakes the bank has made or any other types of activity going on with your account. Unfortunately, we do have scams going on in the world today, and then you can catch if somebody has gotten into your, had gotten access to your account who shouldn't have. This reconciliation should also be done by someone other than the check writer. Here again, you're separating duties so that you have independence by the people involved, and that then gives your organization much stronger internal control. Another suggestion would be that another person on the board, I've got in the material here the president, the bank statement should be either emailed or mailed to the president, or the president should access at the end of the month the bank statement to look through canceled checks, look through the bank statement, make sure as a second set of eyes to once again make sure that no fraudulent activity or activity that should not be in your account, your organization's account, has been included in your bank statement. One decision you are going to have to make when you start your organization is whether you're going to have a cash or an accrual basis of accounting. Cash basis of accounting is going to be the most straightforward between the two of these items. Cash basis accounting, basically money coming in the door is income, and in general money disbursements going out the door are going to be expenses. Now there's some exceptions to that, fixed assets, your equipment, your furniture, your fixtures, those types of things. But by and large, again, cash coming in the door is going to be income. Cash disbursements going out the door are going to be expenses. The accrual basis of accounting, this is going to be more complex. Accrual basis includes receivables that your organization will have. A receivable is this. An example of which is if your organization bills a member and sends an invoice out to that member, at the time that invoice is created, you have a receivable on your books, and your income for those members' dues then is going to be shown on your income statement. So the accrual basis, even though it's more complex, it's going to give the organization and the board a much truer picture of the status of the organization. Now, the accrual basis of accounting also includes accounts payable. And accounts payable is, let's say you have a utility bill that you receive for your power. When you receive that bill, you are going to put that on the books as a payable, and you're also going to record the expense at that time. Okay. Now, if we stop right there, okay, we've got a receivable on the books from the previous example, and we've got a payable on the books. Now, what happens with those accounts, over time? Well, when that member pays that invoice, then that's when you are receiving the cash in the door, and at that point, then the receivable balance is decreased. Likewise, when you pay that utility bill, you're going to be sending a check to, or they're going to auto draw from your checking account. You're going to be paying that utility bill. Your accounts payable balance at that point decreases. At the point of receiving the cash and at the point of paying that payable, you do not record income and expense again, since it was already recorded at the time that the receivable and the payable were set up. I know it's somewhat confusing there, but the accrual basis, by including these receivables and including these payables, gives a much truer picture of what do we expect to receive from members, what do we need to pay, what bills have we received. And the cash basis is, as I said, money coming in the door is going to be income generally. Money leaving the door, disbursements are going to be expenses. There's no recording of receivables and payables, so those would have to be kept with separate ledgers if, and the board should have, for instance, the payable ledger, because on the cash basis of accounting you could have 10, 20, 30,000 in bills that need to be paid, but they're not shown on the financial statements. So the financial statements can be a little bit misleading there. The financial statements should be discussed by the board on a monthly basis, so the board is up to date on what all is going on in the organization. On occasion, if an organization is running short on cash, low on cash, then they may look to have loans from board members. This you have to be very careful with. You need to keep the accounting up to date with this. Unfortunately, in some cases, hard feelings can, of course, occur with this situation. So everything needs to be very up to date. Loan documents actually reduce these types of loans, as with loans with banks, should be reduced to an actual paper document. What do you do if you have fallen behind on your accounting? Well, one of course alternative would be to spend the next couple of weekends trying to catch up, or you could hire a firm to do accounting to help you in the short term catch up. But the main point would be to have some plan to get the accounting back up to speed so that the reports and reconciliations are going to be up to date, so that you can see if there's going to be any problems, attack those problems earlier rather than later. Balance sheet items. Balance sheets include a listing overall of all the assets of your organization. They also list all the liabilities of the organization, and they also list your fund balance, or another word for that in the for-profit world is retained earnings. So what are assets? Well, assets of the organization are cash, and they're also equipment and furniture. Those are just some of the examples of assets. What are liabilities? Well, some examples of liabilities are bank loans, board member loans, and also payroll liabilities. So if you have somebody who you are paying to do work for the organization, then the payroll that you're paying them, you are going to have some withholdings that you need to then send on to the IRS and send on potentially to the state where you are. And those are the withholding liabilities that would be shown on a balance sheet. Your fund balance is going to be an accumulation of your income from prior years or deficits from prior years. So if you have, for example, in year one of your activity, if you have $1,000 of profit, then the next year you have $500 of loss, then at the end of the second year your fund balance is actually going to be at $500. You've got the $1,000 from the first year and the $500, which is a loss from the second year. So the two of those netted together would be $500 going into the third year. Income statement. Your income statement is going to be a listing of your income accounts, a listing of your expense accounts, and so however detailed you wanted your accounts, however many accounts you want, for management purposes, to be able to track and manage the organization, there's no secret or no magic number of income accounts that you have to have or you should have. Likewise, on the expense account side, there's no magic number. What you should do is break things out, and if somebody's helping you prepare your 990 or whatever tax return your organization will be filing, there's a listing on that tax return of expense accounts. And so minimally I would suggest that you have those items detailed on your income statement. Some other items that can be very helpful for the board and to manage the organization is and we'll talk in a little bit about budgeting, but a comparison to what the budget is for the year. And the budget should be broken down to shorter periods of time to match up with the financial statement period that is being done. For instance, if you have a December 31st year end for your organization, and right now you are preparing your June 30th financial statements, then the budget numbers that you should be comparing to would be only those amounts that really for the budget that go through June 30 of that year also. Now, another item that can be very helpful is a comparison to prior years. So of course your organization would have to be in existence for more than 1 year to be able to do this. But to compare your income and expense accounts to the prior year can be very helpful to look for trends, look for problems. It can be very helpful to manage the organization overall. Budgeting. Budgeting can be a very important step in the overall financial policy and procedures of an organization. Budgeting is necessary really for cash control and this internal control that we talked about before. By budgeting, you're looking at your organization's what your expectations of your income and your expenses will be over the year. And if the actual amounts are falling outside of those numbers, what you budgeted for, then those should be followed up to determine if there is an issue. And if there is a problem, what corrective action, needs to be taken at this point, sooner rather than later, before we have a bigger problem. The budget should be prepared under the treasurer's supervision, and the board should definitely approve the budget prior to the year starting. I know of organizations that try and budget, and then a quarter to maybe even a half of the year goes by, and then they finally have the budget done. Well, that budget is not very helpful in their overall management of that organization. So that budget should be done well in advance of the end of the prior year. So once the new year starts, you're ready to go comparing against those budgeted numbers. Budgeting can also help to determine where a shortfall in cash could occur during the year. And then through the budgeting process prior to the year starting, then a solution to that can be determined and maybe then alleviated. And then that could help to decrease or eliminate personal loans, board member loans. Now, what are some of the issues that that you should look for? What are some of the red flags? If your accounting person or treasurer is not sharing information, that can be a red flag. The reports, the financial reports, are not prepared timely. Tax returns are not sent in timely. You have incomplete reports. If you're a pretty sizable organization, then somebody who continues to use spreadsheets as opposed to maybe a more involved accounting software. I've got QuickBooks listed on the material here. It would not necessarily have to be QuickBooks. If the person who's really writing checks and also doing the accounting almost never takes time off, then they don't want, sometimes their goal can be they don't want somebody else picking up what they're doing, the papers, the checks, the account ledgers, and figuring out how they're kind of maybe doing something they shouldn't be doing. They also can't answer questions quickly. They routinely say that they have to get back to you. This can be where they have to get away from the situation and figure out, well, how do I answer this question to make sure they don't figure this out or that out, or something of that sort. So any of these, if the reports are not done timely, incomplete reports that are consistently happening, one or two times, that's not going to be a red flag. But if it's consistently happening, then you could have an issue there. Now, at this point, do we have any questions?
Yes, we do. What if a group has been in operation for more than 10 years, but they've never filed any paperwork with the IRS? Should they apply for a 501c something status?
Well, I would, and you said 10 years?
I did.
Yeah, I would say that yes, they should look at the situation right now. Now, that's going to be a circumstance where I'm pretty sure the IRS would go just from the point of application forward for not-for-profit status. So the prior years will probably be determined to be for-profit. And so depending on how that organization has done, you may have corporate income tax returns and unfortunately some income tax that may need to be paid in that circumstance.
The next question, Craig, is a donation to a 501, 4, 6, or 7 tax deductible?
Contributions to a 4, 6, or 7 are not deductible as charitable contributions. Contribution or monies paid to C4 and C6 could be business expenses, under the ordinary and necessary criteria. C7 is going to be more of your social clubs, and that usually then will not be deductible. It's only the C3 organizations that are going to, if you do get approved for a C3, that is a charitable organization, those contributions can be deducted as charitable contributions.
All right, the next question is, what should an association do if an EIN number has expired? This could very well be because an organization has been under the old filing requirements for a 990. What the IRS did is, over 3 years ago, they instituted this requirement for the postcard, the 990N, to be filed. And if an organization did not file that for 3 years in a row, then the organization would, the IRS would revoke the exemption for that organization. Now the IRS has, it is a new application process you have to go through, but they do have expedited procedures to basically get you back into good status. Okay. The next question is, what is the best way to choose between a C3 or a C4? There seems to be some overlap.
Well, a C3, you're really going to have to, it's going to be, you have to be a charity. You have to have a charitable type purpose. And a big item of that, a big purpose would be the educational side of things. And if your organization is only set up for that, and it's to, the general public, then you could very well, get the charitable status approved by the IRS. The C4 status, is going to be, as compared to the charitable status, the C4 status would be much easier to obtain as long as you meet the requirements for the not-for-profit type entity.
Now, Craig, the difference also, you can correct me if I'm wrong, but in a C4 you can put a certain percentage towards lobbying. Is that correct? And you can't in C3?
That's correct. That's correct. C4s can also have some lobbying. Now, you have to be careful with the amount of lobbying. If you are spending 50, 70, 75% of your resources to do lobbying, then the IRS is going to have some problem with that. But a C3, you are correct. In general, you cannot have any political activity. You cannot have any type of lobbying activity.
Are clubs with less than $5,000 in annual receipts considered tax exempt without filing for exemption?
No, they are not. You have to apply with the IRS to be recognized as a not-for-profit organization. In Michigan, here we have a $5,000 level as far as sales of merchandise for sales tax purposes, but not, the IRS does not have a $5,000 level for, automatic exemption.
What if an organization has received their nonprofit status, but then they never did any of the filing?
Yeah, at this point, every organization that the IRS has approved as a not-for-profit organization has to do some type of filing with the IRS. and that's this new postcard filing that the IRS has instituted. And this has been for maybe 5 years now in the running. And again, the filing of that 990N on the IRS website is a it's very straightforward. It takes very little time, but it does keep your organization in good status with the IRS. And so if you go over that 3-year period of time without filing the N, without filing anything with the IRS, then your exemption probably has been revoked by the IRS.
What if you've been a group like we talked about originally, where you've been together for 10 years or more, and you've never done that IRS filing of 501c status? Are you better off starting a new organization? I know that as a professional, you're probably not going to recommend that.
Yeah, because I would say that I can't really recommend that you not file anything for the past, and not come clean with the IRS. But that could be one, and probably at that point you may want to contact an attorney that specializes more in the tax area, just to make sure that your organization is protected as far as anything that the IRS may come back on the organization for.
Now, some organizations are pretty large, and they may have a C4 now. Are they better off also applying for a C3 to do some other things more charitable?
Sure. For instance, our Rotary Club here in Lansing, Michigan, the club itself is a social club. And so that has applied for and obtained a C6 status. But we also have a foundation where we do contribute to that, and then that foundation then sends money to charitable organizations across the country. And so that can definitely be, with the two entities set up, that can definitely be, a good way to go.
Are there any other questions? Go ahead.
Yeah, regarding raffles, does the IRS allow the cost of raffle tickets to be deductible for the purchaser, or is that handled under gambling and gaming of chance? Some 501c3 organizations state on their raffle tickets that the cost is deductible.
As a charitable type contribution is what you're asking, right?
Yes.
Yeah. So any person who buys a raffle ticket, they're really buying a chance to win a prize. And so with that chance to win, the IRS says that there is no portion of that ticket that is deductible as a charitable contribution. Now, meal tickets, to differentiate this with meal tickets, or say golf outings, those types of things, the organization should detail on the tickets, what is the price of the goods or services that are being given to the person, the ticket holder basically, and any price that ticket holder paid above that amount, that would be the charitable contribution. If this organization is a C3, that amount, just the overage amount, would be the charitable portion that could be deductible.
Since 501c3s are charitable organizations, is volunteer work for the community considered considered charity?
No. Whenever you volunteer, your time is not considered a charitable contribution. If you have mileage that you're driving for a charitable organization, that mileage could be deductible. The IRS looks at it more from an out-of-your-pocket type of situation. If you're contributing supplies to your church, or charitable organization, though the cost of those supplies would qualify as a charitable contribution. But no, time is not considered deductible, and also if you offer free rent, say, to a charitable organization, you're not receiving that rental income to then turn it around to pay that amount to the charitable organization. So the IRS considers free rent as not a charitable contribution either.
All right. Are there any other questions? Am I missing any?
Going back to the raffle tickets and so forth, just for the person that's purchasing the tickets, I think I've heard in the past if you're buying lottery tickets or anything like that, you can deduct, if you actually have a big win, if you keep track of all your losing tickets, they're deductible on your tax form as a cost of doing business, as an expense.
Well, actually, Terry, what it is it's a gambling loss is what that's considered then. So yes, if you and some casinos around the country will give frequent players a printout at the end of the year of these are all your wagers, these are your winnings, that type of thing. And so if you do have a win, then you can deduct your previous wagers up to the amount of your winnings as a gambling loss. And those gambling losses are definitely not charitable type donations or deductions, but the gambling losses are itemized deductions for an individual.
This sounds exactly like when I was farming before the turn of the century.
All right. Are there any other questions?
In regards to mileage, how would one be able to use this as a donation? What documentation would an individual need to have?
Now, can you repeat that, Christine?
In regards to mileage, how would one be able to use this as a donation? And what documentation would an individual need to have?
Well, whenever you have a car that you are using for charitable purposes or for business, the IRS does require you to keep a log of your mileage. Where are you going? What's the mileage to get there? What's the business purpose or charitable purpose? And so every mile you drive on behalf of a charity, you can multiply that by 14 cents, and that is your charitable mileage deduction. Now, as an individual, you're going to need to itemize your deductions to be able to take a charitable donation. But that's how you would be able to calculate what your mileage part of your charitable contribution would be.
Any other questions?
We had a good question from Jennifer. She was asking about how much money you can accumulate through your projects and charities, and when do you have to disperse the proceeds? Do you have to do it immediately, or can you carry it over in a CD? Or
yeah, you do not have to. You don't have to spend everything that you take in as a not-for-profit organization every year. You can put your excess, money into a CD for a period of time to earn some interest on that. So there's no. If you're accumulating, large quantities of money, then of course the IRS may question what your purpose is, what's your plan for all this money. But no, you can reasonable amounts going forward, depending on the size of your organization. Those can be kept in a savings account, CD, that type of thing.
But reasonable is not defined?
No, it's really not. There is no percentage amounts or dollar amounts or anything of that sort that's specified by the IRS.
how do we make sure our 501c3 status is the proper status? We have been a 501c3 for a long time, so it seems we must be in proper category since we file every year, and you would think something would have been said by now.
And I would agree. Part of the 990 form, if this organization has been required to file that, asks for any changes in bylaws or changes in what the organization is doing, its purpose, and that type of thing. If there has been a change in this organization, yeah, then maybe C3 status really is not appropriate, and they do not, continue to qualify for that. But if really no change has been made to the organization and its purpose or programs since its beginning, since approval from the IRS, then you still should be fine.
Do you want to mention anything about GuideStar for people that may want to check the tax status?
Yes, GuideStar.org is a website that is listing many, if not all now, they've been working on it for quite a period of time, of charitable organizations. And the website will be listing other types of, not-for-profits at some point here in the future. But most C3 charitable type organization 990 information is out there on that, is on that website.
Regarding mileage again, nonprofit is not the same as a charity. Is nonprofit mileage deductible or only charitable?
Well, nonprofit mileage could be deductible. Again, the C4 and C6, those dues or the money that's paid to those organizations could be, a business type deduction under what the IRS says, ordinary and necessary business expenses. So, yeah, that mileage, it could be deductible, but it could be more deductible as if you have a business that you're, running also, then maybe it's business mileage for your business also. But if it's strictly for the not-for-profit entity, and the not-for-profit is not going to reimburse you, then yes, it won't be charitable mileage, but it could be ordinary and necessary type business expenses.
Christine and Terry, are you seeing any other questions that I'm not seeing?
No, I think we are out of questions.
Did we ask the one, how many years should a fund balance go back? Did that one get asked? I don't believe we did.
Now, how many, you mean how many years should be included in that fund balance?
Yeah, the question is, how many years should a fund balance go back?
Actually, a fund balance, which is really your accumulation of income and losses throughout the life of your organization, should actually go back to the start of your organization. So the fund balance really is going to include all activity that's ever been done with your organization.
Okay.
C3s are allowed to do some lobbying, but limited on how much of their receipts are spent on lobbying. Is that correct?
Well, there is an election that C3s can make, and then that's a calculation that really is beyond the scope of the webinar here. So C3s can, with a particular election with the IRS, but I would say that I would recommend to that organization that they not do any lobbying because, or any other type of political expenditures, because that can definitely put your charitable status at risk with the IRS. If that is an important item that that organization feels needs to be done, then I might create another entity that would maybe do some other things, other programs and whatnot, and then also do some lobbying along with its purpose. But that entity would not be a charitable type organization.
If you had a C3 and a C4 within your organizations, is there any way to transfer monies out of the C3s to the C4s, or is that just not allowed?
No, there are ways that you can do that. Transfers out of a charitable organization to a non-charitable organization are going to be much more closely scrutinized by the IRS than money coming from a non-charity to a charity. Okay, so the C4, let's say, is doing some of the activities for the C3. So the C4 then bills for maybe part of someone's wages or supplies that were purchased, things of that sort. That's going to be okay because you're going to have an invoice and you're going to have documentation going to the C3 to then basically reimburse the C4. Okay, so that's going to be fine, but it's going to be more closely scrutinized.
Craig, as
All right.
a 501c3, what information must be provided to the public?
For a C3 organization?
Yeah, I think that means at their request. If they request to see something, what do you have to show them?
Yes. So any not-for-profit organization, you're going to have certain public disclosure type rules that you need to follow. So charitable organizations, for instance, should have a copy of their 990 available, a copy of their Form 1023, and that, remember, is the application for charitable status. I would recommend having their bylaws and articles available, minimally articles. And then I would also have the IRS approval letter all in a file that's very easily, that you can get to easily to give anyone who comes into the office or be able to mail that out for anyone who requests it. Now, some organizations, with their website, they are putting the 990 right on their website, and so it's available for the public right there, and that they don't have to have an office person that's going to has to worry about getting that information, respond to a certain question or request for this information by a certain period of time, because the IRS does have certain periods of time that they require this response.
How can a 501c3 be exempt from property taxes?
Well, usually a C3 doing a charitable status, education purposes, that's going to allow them to be exempt from personal property taxes. Now, I know that taxing jurisdictions, though, are really narrowing what they're going to approve as far as exemption from their personal property taxes. As we know, across the country, many states and local governing jurisdictions are very low on cash. They just don't have the income, and so they're narrowing exemptions and then trying to hit many more not-for-profit organizations for this tax. And so if it's truly charitable, then you should still be exempt.
We've heard some trail grooming club volunteers are able to get a tax break for the time they volunteer in a machine. I've been told by our tax people there is no way to legally get a tax break for time spent in a tractor grooming a trail. Any thoughts?
Well, I think this question goes to, again, the whether someone volunteering their time would be able to get a charitable deduction, for that time. And so, I would agree with their tax people that, based on the time side of things, there would not be a charitable donation that that could be achieved.
What 501c should an endowment fund be?
Well, an endowment fund, I would say you would want to have as a C3 or as a charitable organization, so that contributions, maybe even, now I don't think grants probably would be applicable so much, but so that contributions could be deductible to that foundation or endowment. Christine, did you have a follow-up on the other?
Nope, I just have one more question.
Okay.
If you're a 501c7, can the mileage be deducted? Can a member's mileage be claimed as a deduction?
Yeah, I would say that that answer would be no, because remember, C7 organizations are going to be social type clubs, and so that's going to be social purpose, recreational. It's going to be you know, not really a business type purpose as looked at by the IRS.
All right, this could be our final question. In order for a donation to be considered charitable for our organization giving them money in terms of the IRS, must the community group you're giving the money to have filed a Form 990 of some sort? So do you, before you give a group a charitable contribution, should you be asking to see their charter?
I believe this question goes to, so if your organization is a charitable organization and you're going to give money or donate to another organization, should you determine whether that other organization is a charity? And I would say yes. You need to determine the entity that you are paying as a charitable contribution, that that entity has received charitable status from the IRS.
And then
that really could be, sorry about that, that could really be part of, if you just ask them for their exemption letter from the IRS that they should have available for the public anyway, then you would know for sure.
Or you could find out their tax status, go on GuideStar.
Correct, GuideStar, or even the IRS does have, you know, search capabilities on their website for charitable organizations.
All right, can we just clarify one more time? If a group had received their 501c3 status 10 or 15 years ago, haven't done anything with it since then, what would be the correct action for them to start now to make it right?
Okay, so this organization, I'm hearing was created, received charitable status, but up to this point then has done no other filings with the IRS. And I would say at this point, you know, that organization, that charitable status has been revoked by the IRS after that period of time. And so they should look at doing, first of all, searching on the IRS website if they're a charity, seeing if they can find their name on the IRS website. And if it's not there, then they should go through these expedited procedures to get their status back in good standing with the IRS.
Is that same search the same for all the other C statuses?
No, unfortunately not. This is only going to be a C3 type listing.
Where can you find a Form 990 or the Easy 990?
Those are going to be on the IRS website, and that's going to be irs.gov. And then you go through a couple of different screens. You can get to the forms and pull it up there with the instructions also. If they're having trouble with that, Christine, you know, if they send you their contact information, I can send them that form too.
All right. Any other questions?
We can probably also provide information on all those C designations, you know, C3 through C20, whatever it is. I know that's available. We could probably have a link for that also.
Sure.
Sure. We will provide that tomorrow along with this PowerPoint that Craig has put together.
And one of the comments that just came up is if you have your tax ID number, that's an easy way to search for your status. We'll maybe make this the last question. How do you feel about expedited procedures?
Is this would this be in the case of an audit or something of that sort? I'm wondering.
Let's see.
Probably no additional.
It says, how do you find out about expedited procedures?
Oh, I'm sorry. Did I say feel? How do you find out about expedited procedures?
Oh, this is what they're referring to are the expedited procedures to reinstate themselves as a not-for-profit or a charitable type organization. And if they send their contact information to Christine, I can get that summary to them.
Okay. All right. The two questions that we haven't done anything on is, will this presentation be available to others? What our hope is to archive these webinars so that people can go to the ACSA website and listen in on those at any time in the future. We're working on that. And can we get a copy of this presentation emailed to us? The PowerPoint that Craig has provided tonight will be emailed to all the participants, and I'll need to visit with Christine. When we had our board meeting last week, I emailed that recording to Judy King, the secretary. We need to determine, because of the size of that file, if we're going to be able to email it out, and if not, we may have to save that on the ACSA website also. But we'll let everyone know how we're able to handle that after tonight's webinar and what we find out. I think with that, Craig, thank you very much. We've had several comments here that they say thank you, very informative, easy to follow. Craig is a very good presenter. Look forward to the evaluation opportunity. So on behalf of ACSA, we would like to thank you for giving up of your time tonight and providing this valuable information to us. And we actually felt before tonight's webinar that this might be an important enough issue and topic that we may have a follow-up to this because of the questions that were generated. I think there's a lot of interest, a lot of uncertainty, so we may just have a follow-up or part two to provide a little additional information on this if we can arrange that in the future.
Definitely. It was a pleasure, Dwayne, so thank you.
And again, our goal on these webinars is to try and keep them to around 45 minutes to an hour, but clearly there were enough questions to keep the conversation lively tonight. We thank everyone for their participation and for your questions. And if we do have a follow-up to this, we'll let you know. Say in March, it might be a good time for another one prior to the end of the tax season. So thanks, everyone, for participating. Hopefully we answered all the questions that were presented to us. We had quite a few questions, so if we missed anyone, we apologize. Get a hold of Christine, and she'll get the questions off to Craig, and we'll try and get you answers. So with that, thank you, everyone. Have a good evening, and thank you for participating in the webinar.
Thanks, Dwayne.
Okay, good night, everyone.
Good night.
Dwayne, I was going to ask you, did you record it on your end, or is Christine, or?
I recorded it, yes.
Okay. Which format did you record it in?
I don't know. I just...
I went to my settings, and I'll look at it again. And I had two settings. The initial one was record in GoToMeeting format. The second one, if you look in your settings, it says convert to Windows Media Player file. So I clicked on the second one just to see how that works. So if you did it in one, I did it in the other, it'll be interesting to see the difference.
Okay, and I recorded it on the first one, record in GoToMeeting format. No processing time, but some users may need to install a codec before viewing in Windows Media Player, not Mac compatible.
Right.
So, okay, well, I'll save it obviously in my format. You save it in yours, and we'll see which one works best.
Yeah. Okay. I just thought I'd try it just to see. So.
Yeah, absolutely, and I didn't do that. And depending on the size of the file, I'll see if I can send it to Christine, and then we'll figure out, if possible, how to archive it on the ACSA website. I think that would be a good idea to let people access it.
Yeah.
I think that would be a great idea. I'll check with our web host tomorrow, too, to see how we go about doing that.
Okay. And maybe the size of the size of this file isn't prohibitive from being able to email it, but we'll know as soon as I try and send it.
All right. Great job tonight.
All right. Well, thanks for attending, Terry. Appreciate it. And Christine, thanks for